If you've spent any time in the global currency community, you've probably seen the headlines. The Iraqi dinar is about to revalue, or Vietnam's dong could skyrocket overnight. Every few months, excitement flares up again. Social media posts, leaked screenshots, whispers about imminent announcements. It's enough to make anyone holding IQD or VND wonder. Is this it? Could my patience finally pay off? Welcome back to Iraqi Dinar News Today, where we cut through the noise, separate rumor from reality, and bring you clear insight into what's really happening behind the scenes in Iraq, Vietnam, and the global currency markets. 1. Why the revaluation story never seems to die for more than a decade. Investors and enthusiasts have followed the dream that Iraq's currency, the dinar, could one day rise dramatically in value. The same goes for Vietnam's dong. The logic sounds simple. Both countries have growing economies, vast natural resources, and potential for reform. If they stabilize and strengthen, wouldn't their currencies also strengthen? That idea isn't crazy, but the version of the story that circulates online often distorts how currency systems actually work. The truth is, revaluations can happen, but they are usually small, carefully managed adjustments, not overnight windfalls that make millionaires out of small investors. Central banks rarely, if ever, pull a surprise that instantly multiplies a currency's value by hundreds or thousands of percent. Doing so would crash trade balances, create chaos in contracts, and destroy export competitiveness. So why does this story persist? Because it's a mix of hope and possibility. Iraq and Vietnam both have impressive economic potential, and people genuinely want to believe in a turnaround. Add in a few misunderstood government announcements or mistranslated central bank statements, and suddenly the rumor mill spins again. 2. Understanding what a revaluation actually means before we go any further, let's define our terms. A currency revaluation is when a government or central bank officially increases the value of its currency relative to others. It's the opposite of a devaluation. Revaluations typically occur in tightly controlled, fixed exchange rate systems, when the country's economic fundamentals have improved enough to justify a stronger rate. A redenomination, on the other hand, is when a country changes the face value of its currency, for example, removing zeros to simplify transactions. This does not change the underlying value, it just makes accounting easier. Turkey and Zimbabwe have done this in the past. Many people confuse redenomination with revaluation, but they're very different. So if Iraq were to remove 3 zeros from the dinar, that wouldn't instantly multiply anyone's purchasing power. It would simply change the units. 3. The Iraqi dinar. Progress, potential, and obstacles. Let's look at Iraq first. The Iraqi dinar, IQD, was reinstated after 2003 when the country restructured its financial system following years of sanctions and conflict. Since then, Iraq's central bank, CBI, has maintained a managed exchange rate, roughly around 1,300–1,400 dinars per US dollar as of recent data. Over the past few years, Iraq has made real progress. Oil revenues have surged, giving the government solid foreign exchange reserves. The CBI has tightened anti-corruption controls on foreign transfers. Inflation has remained relatively low compared to many developing economies. Digital payment reforms and international banking connections are gradually expanding. All of these are positive signs. They indicate a more stable financial system that could, in time, support a stronger currency. But challenges remain. Iraq's economy still depends heavily on oil, and non-oil sectors contribute only modestly. Political tensions between Baghdad and regional governments often delay budget implementation. And the parallel market, where dollars trade informally at different rates, continues to complicate the CBI's efforts to unify the exchange rate. So, could Iraq revalue the dinar soon? Experts say a major revaluation, the kind that multiplies the currency overnight, is highly unlikely. What's more realistic is a gradual appreciation if reforms continue and the parallel market gap closes. 4. The Vietnamese dong. A quiet success story. Vietnam's case is quite different. The Vietnamese dong, VND, has been remarkably stable over the last decade. The State Bank of Vietnam carefully manages the currency within a daily trading band. Despite being labeled undervalued by some analysts, the dong's value reflects Vietnam's export-driven strategy. A weaker dong keeps its manufacturing competitive, a big reason global companies continue to move production from China to Vietnam. But Vietnam is also evolving fast. GDP growth consistently ranks among the highest in Asia, averaging 6–7% before the pandemic. The country has signed major free trade agreements, attracted record levels of foreign direct investment, and developed a tech-savvy young workforce. Its economy has moved far beyond textiles and footwear into electronics, renewable energy, and digital services. Would the government want to revalue the dong dramatically? Not likely. A sharp rise would make exports more expensive, hurting the very sector that drives Vietnam's prosperity. Instead, the central bank will likely continue to allow a controlled, slow appreciation as domestic income rises and inflation stays moderate. 5. The anatomy of a rumor. So where do all these revaluation is imminent claims come from? They often start with a kernel of truth. A government might hold a routine meeting with international partners like the IMF or World Bank. Someone leaks that meeting to social media, and suddenly it's reinterpreted as emergency sessions to prepare for revaluation. Or the central bank publishes a statement about currency reform, a phrase that can mean tightening regulations, introducing digital payments, or redesigning banknotes, but in online forums it morphs into proof that the RV is about to happen. In the age of screenshots and Telegram channels, rumors move faster than facts. And because many retail investors want to believe, even weak evidence spreads like wildfire. Financial analysts warn that this cycle can lead to disappointment, scams, and unnecessary risk-taking. That's why credible sources like the CBI, the State Bank of Vietnam, the IMF, or Reuters verified data are essential when evaluating any claim. 6. Could a real revaluation ever happen? Yes, in theory. If Iraq or Vietnam decided their currencies were too weak relative to their economic fundamentals, they could strengthen them gradually. That would involve 1. Boosting exports and reserves. 2. Reducing inflation. 3. Gaining investor confidence. 4. Coordinating with international bodies like the IMF to manage volatility. But such a move would not be secret or sudden. It would require months of technical preparation and public communication. Central banks don't risk shocking markets. They aim for predictability. For Iraq, a revaluation could follow sustained economic reform and political stability, perhaps lifting the dinar modestly against the dollar over time. For Vietnam, appreciation might occur through steady market forces as wages rise and productivity improves. In both cases, evolution, not revolution, is the realistic path. 7. How to read the signs like a pro if you're following dinar or dong developments. Here are some practical signs to watch for. The ones that actually matter. Official central bank announcements. Genuine revaluations are announced formally, not leaked on social media. Legislation and structural reform. Major monetary shifts often require new banking laws, budget approvals, and IMF consultations. Exchange rate unification. For Iraq especially, closing the gap between official and street rates would precede any stronger currency. Reserve growth. Rising foreign exchange reserves signal confidence and readiness to defend a stronger rate. Stable inflation. Revaluations are only sustainable if domestic prices remain under control. If these fundamentals aren't in place, any claim of an imminent RV is almost certainly false. 8. The investor's mindset. Hope versus strategy. Many small investors buy dinar or dong notes hoping for life-changing gains. The dream isn't foolish, it's human. We all want to believe that patience and courage will pay off. But smart investors separate emotion from strategy. A healthy approach is to treat exotic currency holdings as speculative collectibles, not guaranteed investments. That means only risking what you can afford to lose, diversifying your portfolio, and focusing on verified financial instruments. Stocks, bonds, or funds regulated by recognized authorities. If a true currency shift happens one day, great. But your financial future should never hinge on unconfirmed rumors. As financial advisor Peter Cardillo once put it, hope is not a strategy, fundamentals are. 9. Why these rumors matter anyway. Even though most revaluation claims don't pan out, they reveal something important. Global trust in emerging economies is growing. The mere fact that people speculate about Iraq and Vietnam shows how far both nations have come from past crises. Iraq is slowly rebuilding, integrating technology and reducing corruption. Vietnam has become one of Asia's most dynamic economies, showing resilience through global shocks. The world is paying attention, and that attention, over time, can translate into genuine currency strength. So while the overnight millionaire narrative may be fiction, the long-term story of growth and stability is very real. 10. How global markets would react to a genuine revaluation. Let's imagine, purely as an analytical exercise, that one or both currencies were to rise significantly. What would happen? Trade balances. A stronger dinar could make Iraq's imports cheaper but might reduce oil competitiveness. For Vietnam, exports could slow, prompting adjustments in manufacturing. Regional impact. Neighboring countries could face capital flow shifts as investors rebalance. Commodity prices, oil and metals might fluctuate if Iraq's purchasing power increases. Global currencies. The dollar could see short-term volatility as funds move toward emerging market assets. Investor behavior. Precious metals and cryptocurrencies might experience hedging inflows, just as they do during other monetary events. In short, even a modest revaluation would ripple through multiple asset classes. But again, such an event would unfold transparently, with plenty of notice, not as a secret midnight switch. 11. Protecting yourself from misinformation. Every year, new gurus and insiders appear online claiming exclusive knowledge of when the RV will happen. Some charge for access to private groups, sell currency bundles, or promise insider rates. Regulators have repeatedly warned the public to be cautious. Neither the U.S. Treasury nor major banks endorse or conduct private redemption appointments. If someone claims to have a special connection or guarantees profits, that's your cue to step back. Legitimate financial opportunities never require secrecy or NDAs. The best defense is simple. Verify everything through official government or central bank websites. Ignore anonymous intel drops. Consult licensed financial professionals before making investment decisions. Information is power, and in this market, skepticism is your best ally. 12. The real future of the dinar and dong. So what does the future hold? For Iraq, gradual improvement is likely. Continued stability, higher oil revenues, and better banking transparency could eventually allow the dinar to appreciate modestly. The central bank has already hinted at digital payment reforms and stronger anti-money laundering frameworks, all signs of modernization. For Vietnam, steady strength seems assured. The dong may not suddenly revalue, but as incomes rise and foreign investors pour in, its purchasing power will naturally grow. In the next decade, Vietnam could well become a middle-income economy, supported by a more flexible, respected currency. Both nations are on paths of progress, not instant miracles, but genuine, hard-earned growth. 13. Staying grounded and hopeful. At the end of the day, it's human nature to look for turning points, the big moment when everything changes. But most transformations happen quietly, step by step. Iraq and Vietnam are both walking that path now. If you hold these currencies as a symbol of faith in recovery and reform, there's nothing wrong with that. Just remember that patience, realism, and good information are worth more than any rumor. So what do you think? Will the Iraqi dinar and Vietnamese dong slowly climb over time, or are we still years away from any major shift? Drop your thoughts in the comments. I read every one of them, and this community always brings great insight. If you found this breakdown helpful, hit that like button, share this video with fellow investors, and subscribe so you don't miss our next deep dive into the world of emerging market currencies. Thanks for watching. This has been Iraqi Dinar News Today, where we keep you informed, balanced, and ready for whatever comes next. Disclaimer: the information provided on Iraqi Dinar News Today is for educational and informational purposes only. We do not provide financial, investment, or trading advice. All content shared on this channel is based on publicly available data and personal opinions. Viewers are advised to do their own research and consult a licensed financial advisor before making any investment decisions. Iraqi Dinar News Today is not affiliated with any government agency, bank, or financial institution.